This is the briefing for Friday, September 27th. Except for the failed breakout attempt yesterday in the stock indices, really been kind of a boring week. Really just not a whole lot of movement if you're trading the indices themselves. As you can see, this 60-minute chart of the spiders, the Qs, and the IW, I'm using 60-minute during the week for subscribers. I use 15-minute to talk more about the short-term support and resistance areas and the potential for a breakout. And we did get a breakout on Thursday, and it appeared that the indices were off and running. But as you can see, and this happened basically on a 15-minute chart, and you can see it on an hourly chart, is that volume opened up fairly decently. You can see this volume spike here. The same thing with the Qs, and the not so much with the Russell. The Russell was really just lagging through the whole week. But then you can see that volume was higher, so it looked like we were going to see a continuation of this move or this breakout move. But there was no follow-through. Even on a 15-minute chart, there was no follow-through. I can show a 15-minute chart here real quick. So you can see right there, there's the breakout move, and here is the next 15-minute candle. There was no follow-through to the upside, and the move or the breakout was completely retraced in yesterday's trading. Now, what we did get later in the day was a retest of the breakout point, and then of course we got another move back to the downside in today's trading. Volume is fairly light. If we look at it in terms of an hourly basis, we had some volume coming in as the market went into its lows for the day. A little bit of buying that came in an hour in the second to last hour of trading on the spiders. Qs are, I should say, the spiders are trading right just below support at the 573 area. Actually, that's resistance at the 573 area. Next level of support is going to be 566 in the spiders. Now, the shorter term charts, it's a little bit different. In terms of the Qs, you can see that it is rotating right around the upper resistance area of this area of rotation, which comes in right around the 486, 487 area, and then below that is going to be support around the 478 area. And then of course the Russell is really testing the lower extreme as opposed to the other two indices that are testing the upper extreme. So support comes in at 218 in the IWM. Breadth, surprisingly, this week has been fairly decent. I don't want to, suggest that it was strong. It wasn't necessarily strong, but it was fairly decent. You can see that right through here that it recovered nicely. Is slightly negative on Wednesday. Thursday it improved, and today it improved slightly, a little bit more today as well. You can see total volume. This is total volume on the spiders. You can see it ticked down. So volume over the last few days, you can see, was really kind of light. 52-week highs minus 52-week lows, holding its own basically. A little bit of a tick down in today's trading, but nothing to write home about. In the Qs, you can see volume falling off once again. Now this was a move to the downside below what was support. So it's going to be interesting to see how that's resolved. Once again, breadth fairly positive, but nothing to write home about in terms of weakness or strength in one direction or the other. The same thing with the IWM or the Russell. You can see Russell breadth was basically fairly positive, but nothing really strong. Tested the upper extreme at 222, 223, and then we got a selling tail that came in, closing right around the 220 area as well. So basically, it appears the market is looking or waiting for some information as to what the next directional move will be. Now, it is interesting that we have the spiders at all new all-time highs. Yesterday was a new all-time high, and of course it is lingering just below that. So resistance is always the previous day's high or low, but I would suggest that the high for Thursday, which is the 574.71, let's call it 575 area, is upside resistance, and then downside support is coming in right around that 565 area. Bread held its own through the week. We are neither overbought nor oversold. We're approaching overbought, but basically we're fairly neutral with a slight leaning towards overbought. But this does not preclude the market from going higher and or lower. So the indicator really is more beneficial when we get to extremes. When you get to an extreme up in this area or up in this area like this, then it gives us a pretty good indication of a higher probability of a move in the opposite direction, similar to this down here as well. So basically, the market is holding its own in terms of percentage of stocks above its 50 and 200-day moving averages. This is the S&P 500. You can see that it's holding its own. It's above this trend. In terms of the 200-day moving average, it's above this trend. I would suggest internally the S&P 500 is stronger than the other indices. This is the NASDAQ. So this is the percentage of stocks above 50-day moving average. You can see expanding slightly this week, and the 200-day moving average really not quite above trend yet. So it's going to be interesting to see how that is resolved. And then in terms of the Russell, you can see a little bit of a downtrend in the Russell. So Russell appears to be deteriorating a little bit more from an internal perspective than the other two indices that we track. Really, I wish I had a lot more to write home about or to offer, but unfortunately, we've just been in a rotational pattern, and really not a whole lot of information that the market is giving us as to next directional move. I got 573 as next upside resistance, and that's basically where it broke out yesterday, and you can see the rotation back to the downside. This is the Qs. I've got it at 466. Probably could move that up to about 488. This area right through here, that would be this high, and then covering these highs right through here. So just watch those areas very carefully. Watch this area in the Qs around 490. If that's broken, that high's broken, that's going to open a test of this breakout high here. And that, of course, would suggest then that that's going to get taken out and the Qs will be on their way to higher prices. Selling tail here, watch this carefully on Monday. I'm sorry, not a selling tail, buying tail. So if we trade much through that buying tail, about halfway through it, I would suggest potentially about the 571, let's call it the 570, 75 area. That selling tail is going to get retraced. And if that's the case, those buyers who bought this aggressively today, if they're not going to defend that price, then we're likely to see potentially another rotation back down to test 569 and below that the 568 area. Have a great weekend, and hopefully the market's going to give us a little bit more to work with next week. Have a great weekend.